What's up, y'all? Welcome to day 18 of my 30-day chart challenge, where pretty much in the month for the month of July, what I've been doing is choosing a ticker and breaking down a ticker here on YouTube every single day for the month of July. So I know it's the 17th, but since it's the weekend, I'm doing it, I'm doing them kind of sort of in bulk. But this one is for tomorrow, which is technically Sunday, which is day 18. But if you guys would like for me to do any tickers, feel free to request. Just leave me a comment with some tickers in the comment section. This is Lance, co-founder of BH Capital Enterprises, where I teach people how to navigate the markets using price action, mainly price action on charts. Any chartist will tell you that a chart is a chart, no matter what asset class you're trading in. Just keep that in mind when you're thinking about the value that technical analysis can bring to your trading arsenal. But anyway, I'm going to be over the next few sessions looking at 5G companies. So Ericsson is up first on the list. And so let's just go ahead and dive into this yearly chart. What you can see here is a decent transition through the market cycle. So phase one here, phase two here, phase three, phase four, and we're pretty much overall back in phase one. Um, really, I guess this 2020 close is significant, but what I would prefer to mark up here is this little area of consolidation on this chart. Um, Most of the price action for the last little while, several years, has been between about $5 and roughly about $15. So that's where I'm going to mark my levels here. So we'll call that top range phase one on the yearly. And this one we'll call bottom range phase one. Yearly. Okay. All right. So this is the area that, the price has been mostly concentrated in over the past several years. You can clearly see that on this chart. There's really no way to know how long Ericsson will continue to consolidate. Um, yeah, it can consolidate into oblivion, really. But the thing about consolidation is it teaches you patience, and usually when the price finally breaks out or breaks down from extended periods of consolidation, they tend to be pretty strong moves. Um, so that's just a little something to keep in mind. Also, some decent levels on the yearly chart that I'd be looking at is this pretty much $20 area, this mid 20s area, and then again the mid 50s, and then up slightly above 80. But as you can see, above 80, this thing just, really accelerated downward after that. But the all-time high is up at 131. A lot of selling pressure came in there and really just depressed this price, and it hasn't recovered since then. And that was back in 2000. So, but yeah, let's move on to the monthly chart and see what's happening over there. Monthly chart. Let me take these studies off so I can see a bit better here. Um, Maybe I need to do the 20-year monthly chart. Let's see. Let's see what the 20 looks like. Okay, so you can see it a lot better there. where basically, for the most part, the price just kind of zigzags in some sort of way between the this $15 area and this $5 area. So, I mean, you could play that, honestly. And of course, that's not any sort of investment advice, but when things are consolidating, if that range is wide enough, sometimes I'll play that, you know. Um, so yeah, as you can see over the past several years, pretty much when that thing hits 14, you can short it by puts or whatever, and then when it hits that $5 range, you go long and you just rinse and repeat, you know what I'm saying? So just something, just a visual of how that has looked historically. And that doesn't mean that it will continue that way. That's just a pattern that, I'm seeing right now on this time frame. Um, as far as patterns, whether bullish or bearish, I'm not necessarily seeing that right now. But what I am seeing is recent, uh, a recent bullish trend line break here on the monthly chart. So, and here's what I mean. So, for several months, it was on the up and up. So higher lows and higher highs, and then back in May, it broke and it just has not returned back there. So that sentiment shifted here with back in May with that trend line break. So uh, it appears to be headed down for maybe mid to low 11s. That tends to be an area where it consolidates here on the monthly chart. So somewhere between roughly this mid 11s to up toward, you know, 13, low 13s. So that's an area that I would consider watching. And what I'm going to do is draw a rectangle to serve as a visual reminder of that fact here. So we're just going to do it there. And I'm going to put a little text note inside there. Okay, so historical consolidation monthly. We're going to do a little bit of editing here, of course. Bold. I don't want any text cells on. Okay, so we're going to activate, move this thing over a bit. Okay, so historical consolidation monthly. So I watch the price inside of here over the next, few months or so, to see if this thing is just gonna, chill out a little bit, or if it is really has transitioned into markdown. And what I mean is, phase one here, markup, phase two, a slight markdown here, a little more phase one, and then a nice transition into phase two, short phase one, or phase three, I mean, sorry. And, maybe this thing is transitioned into phase four. Maybe. So just watch to see if this thing breaks down below here. If so, then I'm looking at, high tens. But if 10 doesn't hold, or high tens doesn't hold, then it's going to low tens. And if that low tens doesn't hold, it's definitely going down toward $9. But remember the pattern that we've been seeing historically on this monthly chart, and that fits, that aligns with that. So also keep in mind that 2020, um, let's see, 2020's closing price was right here at 12. Was that 12.48? No, that's January. Open. Okay, so 2020's opening price pretty much runs right through the middle of this horizontal or historical consolidation monthly level that I just drew out. So I'm going to mark that uh, price level. Let me change my tool, and I want to mark this area. What's that? 2020, December 2020 closing or open price 12.38. So we're gonna mark that. Okay, 12.38. Call that 2020 open. December 2020 open. We're gonna make this. Gonna make that dotted. Actually, a little more dotted, and I'm gonna change the color a little bit. I think I should go back to this one, the long dashes. Yeah, that looks a little better. So yeah, that's definitely a short-term level that I'll be watching, that 2020 opening price or December 2020 opening price. Um, as you can see, the price has spent most of 2021 above that, but this month is the first month so far in a while that the price is being held below that December open. Um, yeah, I mean, nothing else that I can really say here about this monthly chart, so I'm just going to move on to the weekly and see what's going on the weekly chart. So weekly chart is showing the same thing, that trend line break, phase two of the market cycle here, phase three going on here, with a potential breakdown and transition into phase four of the market cycle. Like I said, still showing that this price could move down toward $10, if that's the case. But just because of, the price action enters into that phase three of the market cycle doesn't mean that it's always going to come with a breakdown. Usually, that breakdown is what confirms that, hey, this thing was actually in phase three, as it turns out. So, just something to keep in mind. Um, Actually, I'm going to remove this historical consolidation thing so we can see that a little better. There we go. All right. Yeah, not really seeing too much here on the weekly chart. Prices move below that 50 period moving average, which lines right up with that 2020 or December 2020 open. So, keep that in mind. Um, but let's see how this, I'm going to take another screenshot. Let's see how this thing looks on the daily with the 50 and the 200. On the daily. As you can see, the price is currently sitting right on top of, oh, actually, no, no, no. So recent earnings was that Friday? Yes, so Friday they announced earnings and the price just really, really gapped down and tanked in a sense. As you can see, it lost almost 11% of its value in terms of its share price based on earnings. Did they miss on? Yeah, they missed on earnings per share, and I'm not sure what else happened with those earnings, but As you can see, the we're seeing bearish sentiment on the 50-period moving average or 50-day moving average, and that spread between the two moving averages is getting more and more narrow. So just about 50 cents of a difference between the 50 and the 200 currently on the daily chart. So what I'd be looking to see is if the price uh, continues to go down. But what I am seeing is that there is some historical demand in this area. So for the most part, when this price gets down inside of like 1180s and maybe even on down to like 1150s, it tends to pop up. So consider that as a possibility. Think about that. And what I'll do here is maybe I'll do another little rectangle just to give myself a visual of that area that I mentioned. So we'll go about right here, and we'll make this. I'll color this like light yellow, like a real faint yellow. So just as a just to have that visual kind of warning that hey, when this thing gets here, look back over its history over the past year and check out what tends to happen when it gets here. You know what I'm saying? So um, just something to look at or and consider. Um, but yeah, that's really it when it comes to Ericsson. Not a whole lot really. Um, I just be sitting on my hands to see if it can break what it does inside these key areas, and then move according to that. But I hope you guys enjoyed this video. Uh, like I said, I'm doing this for every day during this month. And if there are any tickers that you would like for me to check out, leave them in the comment section and I'll add them to my list. Thank you for watching, and I'll catch you in the next episode of Market Markup.